Alright, Sean here for Strategic to Tactical. It is the 5th of October, Sunday. Uh, I will go over the tactical situation with the S&P 500, or the major indices here. So S&P 500, also cover the NASDAQ Composite. I'll touch on the Russell 2000 and also the junk bond ETF, something I've been tracking. So let's first start off. Last week was an interesting week, to say the least. We started off up in here, and actually dumped lower on Wednesday, pretty harsh, and then Thursday had a even dumped lower and had a bit of a reversal prior to the jobs number on Friday, and definitely we gapped higher substantially on Friday, and actually closed quite strong. So going into last week, some of the things I was looking for, obviously the prior week's low was going to be pretty important. It was quite challenging, I'd say, Monday into Tuesday, particularly if you look at Monday. We had a pretty good move lower, and then actually closed quite well off those lows, which kind of gave almost a potential short-term indicator, like, okay, maybe that was the short-term low, and that was not to be. So Tuesday actually again suckered, I think, definitely suckered some early buyers into believing that, as they took out Monday's high, and then looked like maybe they'd be, continue that bounce, and then basically sold off, and then really flushed them on Wednesday. So yeah, it was definitely a little bit frustrating in that respect, but that's what the market does. It likes to frustrate. And anyway, so things I was looking at here, I was watching the McClellan oscillator, and I had drew this trend line here that it's now for a couple weeks, and was obviously we've been going lower, lower, lower. So the market's definitely been showing some big time weakness, even as we were flirting with these highs up in here. The McClellan oscillator was continuing to make lower lows and lower highs, which basically was showing the underlying weakness in the overall market. But what I was focusing on was, okay, a break of that lower low, lower high, and we definitely got that. Actually on Thursday it kind of peaked right to that trend line, and then on Friday definitely showed that it popped back through it, breaking this lower low, lower high. Now, being an oscillator, of course, it's sort of or it's definitely a mean reverting type of index, so it's not prone to be a trending thing. So right now it's just telling me, okay, that short term oversold condition in the market sort of definitely been alleviated with that rally on Friday. So going into the week, a couple things to be focused on. I got a lot of stuff in here. Apologize for the busyness of this chart. I drew, first right off the bat, Fibonacci level here. So it's pretty impressive that Friday's the rally into Friday off the low on Thursday, we're pretty much right at the 50% retracement already. So and that sort of corresponds with the 50-day moving average. We in the lower moving average here is the 150-day seemed to catch support, and if you really go back, quite some time here, this 150 days definitely been a pretty key support level, really since December 2012. It never has not violated that 150-day and bounced off it a couple times along the way, and pretty much did that on Thursday. So that's going to be pretty critical, I think, going maybe not necessarily in this upcoming week, but especially if we do start to tail off and leak back lower. That might be a pretty significant break if that does break. So that's something to just to keep an eye out. I drew a couple trend lines here that quite some time back, that this recent move in this bull market, again since really the start of 2013, has held up. The one here actually got a little violated Wednesday into Thursday, but we closed back above it on Friday. So again, something to keep an eye out for, how these trend lines hold up going forward here. So again, strategically, no kidding, we're still in this bull market. The trend has still been higher, even though we've kind of been on a tactical level. We've just had a pretty good bearish move. So there's some cross currents going on here, and so what I will really be focused on going into Monday is what we've seen in the past, recent past, I would say, when we do get these, flush outs in the market. When we do get the rally is pretty significant and never really looks back. So far that's the case. I mean, like I said, we're already at the pretty much at that 50% retracement level of this move. So what we need to see here is the market really hold up in here, not give back Friday's gain at all. So the key here for tomorrow is to really hold definitely in the upper half of Friday's move, consolidate there, or even press it higher and really frustrate, because and I'm just going to say this just from my own view. Unfortunately, I wasn't in front of my computer on Thursday afternoon. That was really your opportunity to buy as the market really came off those lows and then closed quite strong in the afternoon. That was really your only opportunity to get equities at a decent price. And of course, everything's always easier in hindsight. This is in front of the big number on Friday, so you had to have some conviction to hold it into Friday and into that number, into that job number. So there was really a small window here to get along at levels down here, and then Friday they gapped up and kind of just squeezed it higher. So so was it actual good buying on Friday, or was it just now the shorts kind of caught and forced to cover going into the weekend? And we'll see that early in the week how that develops, and more than likely the market will frustrate again. It'll even if it goes lower, my guess is it'll take out Friday's high, get people guessing, oh, here we go, we're not looking back, and then they're gonna flush it, or if they do go higher, again, it'll be potentially kind of frustrating, especially after a 2-day move like this. Again, it's going to be harder and harder to buy this as it goes up. So again, for it to be continuing this really the short-term bounce to actually continue and then start to making the moves here up higher, definitely want to see don't want to see really give back more than 50% or so of Friday's move early in the week, and sort of consolidate up in these levels here, and then even if it's just a day or two and it really doesn't go lower, again, anyone who's sort of caught short down here or sold down here going to be looking to getting anxious and may want to then have to chase it. Going into earnings, start earnings this week, so that's going to be the focus. So maybe we get some earnings early in the week to sort of give a little bit of foreshadowing potentially of the whole earnings. If it's going to be better than expected or not, and that may have something to help the market one way or the other. 50-day here now should be their resistance as well, and that's going to be something that yeah. Again, if I'm bearish or I'm short, I really don't want to see the market close above that 50-day. If I'm bullish, I'm focused more on Friday. Don't want to see really Friday. I'll even take it down to the low on Friday. Don't want to see that get taken out because that just will potentially tell me that now, hey, you know what, we're going to leak back down, and then much more critical level down here at that 150-day could potentially get taken out, and then now we're talking, we might finally get that 10% correction and then some potentially. But again, I'm just going to play it like I see it, and again, Friday is going to be a significant day, 50 days, something to keep an eye out for. And we'll see how things go early in the week. Again, it's going to be potentially tough to be chasing things higher, but ideally we want to look for those good risk reward situations. We had this MX market extreme bullish on Thursday, but again, it was tough to be buying on the gap up on Friday. But so far, that's been the way to the move to so far that's correct, and we'll see if that continues into Monday. Real quick on the NASDAQ, has been a bit stronger as we've noted over the past couple of weeks. Gave us a few kind of false bullish market extreme indicators here, and finally one did take here from the Thursday. So the key here though again is this was a trend that was taken out basically since spring, but so it's not really that big of a deal, not that big of a trend right now. But we're right back into this range prior to this breakout here, so we're going to see how we, if we can rebuild some of this damage and get back above. I want to say, yeah, that's the 50-day as well. So the 50-day in the NASDAQ sort of resistance. This is the 100-day, so we kind of peaked below it, didn't close below it, so something to keep an eye out. Same thing with the McClellan oscillator, kind of broke that lower low situation. And yeah, again right now keying off that 50-day and Friday's low as far as how that support and resistance early in the week. As we know, the Russell, it really definitely gave it up, violated a lot of these levels here, but promptly bounced. So even though those levels are violated, it's bounced above. So still feel these support levels are intact as long as Thursday's low holds up. That's really what it comes down to right now. But definitely, this is the hurting one of the bunch, and yeah, definitely something we want to keep an eye out for. Again, being the canary in the coal mine, potentially here on the downside, especially if this continues to fade lower. Definitely give the bears more fuel to call at least a correction in the overall market. Again, something I've been watching now for a while is this high yield junk index. It's, again, something that has been almost in some ways leading things, given that third perspective, if you will, on the real overall strength of the market. As you can see here, this has also kind of been beat up pretty hard, and but again, if you could tell that the low in this index happened much earlier, late Friday, Monday to Tuesday, etc. That's where they kind of bottomed out, and then actually came off the lows a couple days before the equity indexes. So this seems to continue to lead a little bit. So again, something to keep a focus on in that downtrend. So it's definitely in a strategically, or I should say tactical, since it's a daily, a bear phase, and it's making lower lows. So the key here is we want to see a high get some sort of short-term high get established, and then we see a short-term low higher than the previous to potentially break that low, break that short-term trend, and maybe allow equities to follow suit. So without any further ado, that's the market tactical update. Thank you.